Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 29th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening at the normal time, thanks so much for doing that. Had just a slight change in plans for the day. Needed to record the show between 8 and 9. We'll make this as pertinent as we can for you. Of course, if you are listening live, we'd love to hear from you. You can send me an email. Send that off to Steve at TFNN.com. Inside the subject heading, please put radio show question. I'll be happy to review your instrument and try to answer your question for you. In the meantime, let's go ahead and get things kicked off here. We've got U.S. equity futures trading to the upside. The S&P is up 13. NASDAQ 21. 45 for the Dow. The Russell's up 7. If we take a look at what transpired over in Asia last night, you had the Shanghai Hang Seng and Nikkei all finish closed higher. The FTSE is up 75 points this morning. The DAX is down 243. We'll take a look at those indices out there. Gold's up $226. Now, the average daily range for gold's movement over the last 10 days has been $150. For silver, $7.87. Silver up $5.70 right now. Copper up 51 pennies. Light crude up $1.63. Natural gas up 17 cents. Platinum up $1.33. Wheat is up. U.S. dollar index is trading down. We're going to take a look at the U.S. dollar index. So let's do this here. I'm going to start, since I'm doing the early show, where you got the pre-market out there, kind of go through what I do with subscribers in the newsletter each morning. And one of the first things that we start with is trying to understand what took place overnight. So for that, we take a look at and I'm going to change screens here. So hopefully I get this straight. I need Mr. Bill here to why didn't that come up? That's weird. Okay, there we go. To make sure that I go back and forth properly, but we'll do the best that I can, try to not screw things up. So right now, you should be seeing the Shanghai, the Hang Seng, Nikkei, UK, the FTSE, and the DAX out there. So we take a look at the Shanghai, and it's important to understand what's going on globally, in the markets to help assess what's taking place inside the United States. So if we take a look at the Shanghai index, it does not have a topping pattern. Price is trading above its green oscillator and change line. It is likely to rally further. Now, we can see that if it does rally further and it ticks above yesterday's or this morning's high, when it opens tomorrow night, that will trigger bar number 8 of a TD9 count pattern. So it's possible that you could get a TD9 count top inside the Shanghai between tomorrow, Friday, and next Tuesday. In the case of the Hang Seng, as you can see, is traded in an A to B equals CD pattern to the upside. It's attained its 1-to-1 price objective, more than its 1-to-1 price objective. And now it needs a bearish reversal candle to confirm a top. Price traded above its green oscillator and change line. No other topping signal. Continuous pattern of really higher highs out here. No reason for this not to continue. So the Hang Seng is likely to rally further. In the case of the Nikkei, when Nikkei has a Rhodes momentum indicator top, price continues to find resistance at its oscillator and change line out there. And as long as that is the case, it may be telling us it wants to back up and head down towards 59.95. It's TD9 count breakout level. We take a look at the FTSE. The FTSE has a Rhodes momentum indicator top. It was formed with that three-river evening star candle formation. Price right now has rallied into that green oscillator and change line. But it's likely going to close inside the swing point that created that three-river evening star. It'll accomplish that task with a close above 10,212. And if it does that, I don't have volume here, but if it does that, excuse me, it increases the odds of a rally up towards the top of that swing point, maybe even take that out and negate that pattern. In the case of the DAX here, now I've drawn in an A to B equals CD pattern on the downside. It does not have that yet. It requires a close below the hammer candle from January 21st. And that low is 24,349.54 out there. If we do close below that, that'll trigger an A to B equals CD pattern to the downside, with 23,923 also being another price target. That's his TD9 count breakout level. The A to B equals CD pattern extends just a little bit beyond that. So that's what's going on over in the international markets out there. Bullish again on the Shanghai, bullish on the Hang Seng, somewhat bearish. We're talking directionally speaking here on the Nikkei, neutral-ish on the FTSE out there, and bearish directionally speaking on the DAX. So let's go ahead and close those charts down. Let's go take a look at the U.S. dollar index. We'll take a look at it a couple different ways. The first way that we're going to look at it, if you give me a moment here, is we're going to look at the U.S. dollar index and the components that make up the U.S. dollar index. And secondly, we'll go take a look at the U.S. dollar index and take a look at its daily, its weekly, and its monthly time frame chart, just to have a bigger view picture, because the stuff that they try to sell you on the boob tube, it's just that. It's a lot of BS, quite frankly, when these people talk about the dollar. They're mostly just reading from a screen, and they don't have a freaking clue. So let's take a look at the let's start with the euro out there. The euro represents 57.6% weighting inside the U.S. dollar index. So you need to know what this is doing. You can see the A to B equals CD pattern to the upside. This did well more than a 1-to-1 A to B equals CD. And yesterday we've got a little dark cloud cover candle. That dark cloud cover candle confirms they sell the D point top. What the euro should do is it should pull back towards its oscillator and change line. That's right around 1.1838 out there. If it does that, that's going to go ahead and put strength into the U.S. dollar index out there. If you take a look at the Japanese yen, let's open this up. So we don't have here is any kind of a bottom pattern. Now, the Japanese yen represents 13.6% of the weighting inside of the U.S. dollar index. It closed below its breakout level at 153.40. Right now, we're trading below that as well. Again, no A to B equals CD pattern, no bottom pattern or anything that I have. It looks to me like, because we have a nice series here of lower highs, that the yen wants to continue to strengthen. That means move lower. The U.S. dollar index would then weaken. In the case of the Great British Pound, you can see like the euro, and this has a 11.9% weighting inside the U.S. dollar index. This has an A to B equals CD pattern to the upside. It has attained the 1-to-1 level, and therefore what it needs is a bearish reversal candle to confirm a sell the D point pattern. Short of that, price is likely to rally. And I would say price is likely to rally. Why? Because price is on the strong side of that C to D leg. This is likely to do more than a 1-to-1 A to B equals CD. Well, if the Great British Pound is going to get stronger, the U.S. dollar index is going to get weaker. Canadian loonie is going to go ahead and form a TD9 count bottom pattern today. It'll complete that pattern tomorrow. Price should rally up towards the oscillator and change line, right in the 138 level out there. No bottom pattern on the Swedish krona, no bottom pattern on the Swiss franc. It was trading in a consolidation pattern. It's made at least that measured move. I take that back. I'm sorry. This formed a buy the D point bottom pattern yesterday. It had a bullish piercing candle, the opposite of the dark cloud cover candle that we looked at in the euro. This should rally up towards its oscillator and change line. That's at 78 cents out there. Bitcoin, the February contract, is trading below profile support, as well as its red oscillator and change line. That is likely to head lower as well. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, folks. We're coming to you live at 8:18 in the morning. If you are listening live, if you are listening normal at our normal programming time, 11:18, thanks so much for doing so. We just covered some of the international markets. We covered the U.S. dollar index from the perspective of the components that make up the U.S. dollar index. We threw in there Bitcoin. And now we're taking a look at here are the U.S. dollar charts themselves. So let's go take a look at the larger time frame. Now, some of you may have remembered. If you don't remember, I've done a study on this. I can't share it with you right now. I can't pull up that chart, but it's a yearly study. And if you go back yourself and take a look at the yearly study, and you go back, I believe it is to 2007. If you take a look at the U.S. dollar index on a yearly basis, every year that the U.S. dollar index closed lower than the prior year, the following year was a rally year. Let me repeat that again. Since I believe it is 2007, every year that the U.S. dollar index is closed lower, the following year it is closed higher. The patterns will repeat until they don't. At this stage here, my belief is that, in fact, that pattern will complete. So we know that that's the larger picture. If that is the case, and we're going to see some type of turn, we'll start to see it on those inter-time period charts. Well, a monthly chart is an inter-period time period for a yearly chart. So let's look at it. Here, what we can see is, and this is courtesy of the Chapman wave, is that we are in wave number 7 on a monthly basis. And in that case, in this very small portion of the Chapman wave, that needs a higher low to confirm that pattern. So do we have a potential of a bottom pattern inside the U.S. dollar index on a monthly basis? The answer to that question is absolutely, we do. Now, the confirmation of that would be a higher low. That can't come until the end of next month. But maybe we'll see a turning signal on a daily time frame or a weekly time frame first. I don't know if we will, but I do know that we will. That's what will take place out there. If we take a look at the weekly time frame chart, the weekly time frame chart has 2 Rhodes momentum indicator bottom patterns. They are being tested as we speak this week. And it would take a close below the level from back on September 19th. That is at 95,845 to negate that signal. That level is just being tested. So I won't know until tomorrow. You won't know until tomorrow whether or not we close below that level. But there's a weekly bottom in for the U.S. dollar index. How about the daily time frame? Well, the daily time frame, it's got an A to B equals CD pattern to the downside right now. So let me just pull this over. You can see that pattern out here. Doesn't have any, and we have a new profile, by the way, that has formed. 95.71 is support. Resistance up at 97.48. This needs a bullish reversal candle to confirm a bottom. So I would say, more likely than not, if we get a bottom pattern inside the daily time frame for the U.S. dollar index, that is probably the bottom for the year. That's based, again, on the annual pattern, combined with the monthly wave number 7 signal, the fact that the weekly already has 2 Rhodes momentum indicator bottom signals, and then a daily, just we're looking for a confirmation there, and that would require a bullish reversal candle to confirm that by the D-point bottom pattern. So that's what's really going on with regard to the U.S. dollar index. If you open up this monthly chart, you listen to people talking, and they're talking as if the U.S. dollar index is just simply going to crater. Actually, I'd have to go back even further. I believe the bottom inside the U.S. dollar index took place around 2007, too. But don't quote me on that exactly. But the bottom goes way back. The way these commercials and everybody else talks about it, they're selling just a lot of BS. But you're not going to get before Steve, okay? That BS before Steve shares with you the real stuff. Now you know what to really pay attention to. All right, so let's move off the U.S. dollar index. Let's go to the soft commodities out here. Don't usually cover those during the show, but again, just last minute programming change, so not a lot of people know about it. Maybe not a lot of people listening, and so therefore not much in the way of requests. So let's just take a look at the soft commodities, get a feel for what's going on here. We'll start with wheat. That's going to be in the upper left-hand side. It's the March wheat contract, which you can see formed a nice, it has both a TD9 count bottom. That goes ahead and forms on December 17th. That is held. That was actually tested rejected. And that tested rejection on January 2nd and 3rd confirmed, or 2nd and 5th confirmed a Rhodes momentum indicator bottom. So it's got a nice bottom pattern. Price right now is taking on its TD9 count breakdown resistance level at 540. You close above that, you have a total change in character trend out there, and wheat ought to rally further. In the case of soybeans, the March contract is going to form a TD9 count top today. It'll complete that pattern tomorrow. And we should see price pull back to the top of its profile at 1071.25. In the case of corn is trading above its oscillator change line and profile resistance, likely to rally further. If we take a look at coffee is pulling back. It's trading below its red oscillator change line. This is likely to get down to the 343.05 level. Sugar is testing profile support at 1467. We're at 1463. If we close below 1467, excuse me, we are likely to head lower. And finally, cocoa has a TD9 count bottom. That TD9 count bottom pattern would be negated with a close below the low from January 23rd, and that low is 40.54. So that's what's going on with regard to the soft commodities out there. All right, so I'm going to close this out. What I have to actually do now is I'm going to change my data feeds on this set of charts, the black background, the white background charts out there. So give me a moment just to get that set. And now let's go take a look at the. This is going to take me a second here to fire this up as well. But let's go take a look at the daily equity future contracts. So we'll take a look at the ES mini. That'll be in the upper left-hand side, or they'll be in the left-hand side. We'll have the ES mini, the NQ, the Dow, and the Russell 2000. So we get a feel for what they're communicating to you and I at 8:24 in the morning on January the 29th. And if you take a look at the Russell 2000, you can see the A to B equals CD pattern to the upside, gets us towards the 2800 area. There is no topping, no other daily topping pattern, anything that's in place out here. What did transpire is that the Russell 2000 closed above the top of its profile for 2 consecutive sessions. That was on the trading days of January 21st and January 22nd. This is a slightly bearish structured, I'm not even going to call it. That looks like a pretty even keel profile. So right now, what we'll say here is price is finding support at the center of its profile, 2652. If we were to close below that, well, we might be seeing a move back to 2613. But right now, the A to B equals CD pattern will resume to the upside with a close above 2692. The Dow equity future contract, similar to the Russell in that it has an A to B equals CD pattern to the upside. It has a wave number 7 top. Price, in this case here, did find support at the level where a counter trend rally would come to an end. And that was at 48,702. The struggle, that's strong support for the Dow. Strong resistance for the Dow equity future contract is 49,531. That's its oscillator change line. In the case of the NQ, yesterday it negates a TD9 count top. It triggers an A to B equals CD pattern to the upside. That gets us back past its all-time high. That all-time high has a Rhodes momentum indicator top. So very likely, because price is trading inside the swing point, that's the swing point from the trading day of October 30th, we're likely to see a move up to 26,670. Yeah, I'm still on here. Okay, that was a weird noise. 26,670. If we take a look at the ES Mini out here, the ES Mini has an A to B equals CD pattern to the upside, gets us up towards a 71 76 level, and if price is able to close above the top of its profile, and that's at 70.2250, the A to B equals CD pattern to the upside should resume. The caveat here is, as you can see, yesterday we triggered wave number 7. That is letter G up there. And that says if we have a lower high today, that would confirm a topping signal. And that could suggest maybe a detour before we go ahead and complete that A to B equals CD pattern to the upside. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. My apology if you were trying to follow along with me at home out there as I was talking about the set of charts to take a look at the daily equity future contracts. I had the wrong screen posted up there, but we have the correct screen now, so you can take a snapshot of the screen and then go back and replay and follow along with the commentary on what the current patterns are inside the daily equity future contracts. Let's go to a question that actually came in late last night, and it was from Les. And give me a second here. And Les's question is, what he wanted to take a look at. Okay, so you want to take a look at gold priced in major currencies. So I'll do that, and I'll flip screens. And this question was, what's causing this parabolic rise out there? And Les, I can only give you my opinion on what is causing it. It's not inflation. I used to have a chart, and I could still go back and find it. But we've all looked at it before. It was the gold chart that showed during the Biden highest inflationary time period that gold basically did nothing. Okay, and not that the printing of money doesn't impact this, but during that time period, it did nothing. What really started the move higher was really the Hamas. It wasn't even the Ukraine Russia war. It was the Hamas attack on the kibbutz. That was the bottom. That was a significant bottom inside of gold that's rallied ever since. And ever since then, Les, international or geopolitical, the chaos has gotten worse. Tommy and I, we talked about it a few weeks ago, 2-3 weeks ago. I'd mentioned to him that I happened to be up in the early morning hours, and I had on CNN, and they were showing live shots of Iran, and just an all out riot that was going on. It was hard to believe that it was really, and it was live feeds that were coming in, and they're really good about they've got so many cameras around the globe and great about live feeds. What's so disingenuous about them is that live feed, or that story wasn't talked about for at least another week out there. They just kind of suppressed it, which is kind of insane. So the issue here, Les, is that getting international news of what's really going on out there, and there's a ton of chaos, ton of geopolitical risk out there. That is what's pushing gold higher. That is my opinion. Period. You can have a different opinion. That's fine. But that's my opinion. So now let's actually turn to gold, because the opinions don't really matter anything. What we're trying to understand is, and we were in this scenario back in the 1980s. Those of you may remember the Iranian hostage situation that went ahead and sent gold up, sent silver up, to the $50 mark. Where gold got up to about 800 or, if I'm not mistaken, something like that. But what I can share with you, I don't have those charts here right now to show you or to pull them up, but there were topping patterns that were present when it made a high out there. And that's going to be the same case this time as well. So where are we in the daily, weekly, monthly time frame for gold and silver? Well, in this case here, we're now taking a look at the live charts. Gold right now is trading out 55.47. It is in bar number 8 of a TD9 count. That says that gold should form at least a short-term top between today and Monday. That short-term top should then, take price back to its oscillator and change line. That's at 5106 at this moment in time. That's going to change. Also, there's a possibility the new profile will form, and that could also be another level of support. So that may be above where the oscillator and change line is. Right now, that level would be 5106. So you're going to get a TD9 count top that will form between today and next Monday. The weekly time frame chart is going to complete a TD9 count top on Friday, tomorrow afternoon. The monthly time frame chart is going to complete a monthly TD9 count top tomorrow. So you're going to have TD9 counts, absolutely, all three across the board on gold. So what are the chances that we might see a retracement here, that we might just see a retracement? Well, they are elevated, that's for sure. Now, the geopolitical, which one trumps it? Is it the technical pattern, or is it the fundamental pattern that's going to trump things? I'm going to go with the fundamental aspect, but the technical setup here, Les and everybody else that's listening in, okay, and this is the time to truly be cautious. Why is this time to be cautious? I'm going to put up the silver charts, and we're not going to see the same thing in silver, all right? So silver is stronger than gold technically, but I could also put up the correlation chart, which we did last week. Correlation between gold and silver, it's directional. If we take a look at the correlation between gold and the GDX, it is directional primarily. And so that says that they're all going to be paying attention to what gold does here. If gold negates their TD9 count tops, boy, strong upward momentum move, which we know it's already a strong upward momentum move. Look, the last time gold formed a TD9 count top on a monthly basis was back in April of 2025. What did that lead to? It led to a 3-month move lower. Wasn't much of a move lower, but it was a 3-month decline. Typically you get 2 to 3 or 2 to 4 2 to 4 bar knee-jerk reaction lows or knee-jerk reaction highs out there. We are in month number 6 to the upside out there. So certainly due for some type of exhaustive move out there. So gold looks like it may be getting ready to form a top. Now, you specifically, Les, had asked about gold priced in major currencies out there. So I did go ahead and pull that chart up last night. Let's pull this up here. These numbers are going to probably be off just a tad. So here you take a look at U.S. dollars. You can see we're already we're a new all-time high there. We're a new all-time high in terms of gold and euros priced in yen. This is as of today. So this is live. You have Great British Pound, Canadian Loonie, Swedish Krona. You got the Swiss franc out there. So you got the Chinese yuan. And you got even Russian rubles. So gold is at new all-time highs this morning in all major currencies. Okay, this is a sign of a bullish market, major bullish market. Now, here is the caveat. And this is with all these all being at their all-time highs. Now, I don't know what their TD9 counts are, but they may be taking their P's and Q's from the U.S., gold priced in dollars out there. And so if we do get that move lower, you just got to be careful, because when gold does top, it'll do so in all major currencies just at about the same time, certainly during the same week out there. And here we could be doing it on the actual same day. So this is gold. This is bullish. Everything is bullish, but you've got to really be cautious. Well, you don't have to be. I would suggest that you be cautious based upon what we are looking at. Now, let's go take a look at the silver charts out here. So the first 2 silver charts are going to populate are the current ones, which is the March contract. I'm going to have to I'll do separately in a moment. I'll do the continuous contract, which is in the right-hand panel out there. That's what I had to do for gold. And that way we get all of the data in there so we can see exactly where we're at with regard to TD9 count or Rhodes momentum indicator signals or anything along those lines. So we come back to this break out here. We'll have the silver chart so we can take a look at. After we're done with that, we're going to go take a look at CCI for Snowball inside the Tiger's Den. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Steve Rhodes coming to you live. It's 8:42 in the morning, not 11:42. We'll be back to normal programming tomorrow. I believe on Friday. I've got to record the show earlier, so I have to check with the guys. My wife's got some stuff to do at the hospital. Anyway, we're taking a look at silver here. And so whereas on gold, daily, weekly, monthly, we had tops across the board there, TD9 signals. On the daily time frame for silver is the only one with the topping pattern. You've got a TD9 count top that's going to confirm today and complete tomorrow. What should unfold, this price should pull back to support. The first level of support is the oscillator and change on 107.07. If price were to get below that, 98.75 would be the price target to the downside. Weekly and monthly do not have topping patterns. In fact, the monthly is going to negate tomorrow its TD9 count top. The weekly negated its TD9 count top 3 weeks ago. So what that tells me, or my interpretation, is that even if we get a retracement, even if it's just a 2 to 4 day, 2 to 4 week, or 2 to 4 month retracement, that the move higher in gold and silver is not over. I'll say silver. At least the move in silver is not over. That's what the charts of silver are telling you and I. So I hope that helped you out, Les, with regard to gold, silver, and everybody else as well. Let's go to, let me change this back. Let's do this here. Let's go with CCI. Let me get the charts for CCI up on my screen. I've got to make one change to the very right-hand panel chart. I'll do that as soon as the other two populate so I don't screw things up. We'll take a look at CCI. And this is for Snowball inside the Tiger's Den. It's a yellow color out there. Okay, so on a daily time frame, CCI had formed a Rhodes Momentum Indicator bottom pattern, and it did that back on January the 12th. Has a nice rally up into January 16th. I don't know at this moment in time, because I'm looking at the other charts, so why it stopped where it did, but we'll find out. And now price is pulling back, and it's traded with inside a bullish structured profile. And what CCI has done is pulled back, or is pulling back, into the buy zone. The buy zone is between 84.01 and 84.89. Let me see here. What is CCI trading at in the pre-market? Give me a moment. We can figure this out here. 85.02, 84.91. So not a lot of liquidity out there. 84.91. So it's still within that buy zone out there. Now, what price did not do yesterday was it didn't get all the way back to test at least the high of the January 9th swing point. There's volume of about 2 million shares that traded that day. Yesterday, you were coming back with 2.2 million shares. So maybe price is going to get down and test that buy zone between 84.01 and 84.89. That's what's going on in the daily time frame. The weekly time frame. Price has pulled back and tested and rejected a swing point. Was with lighter volume. 12 million shares, January 10th, the week of January 10th. Tested, well, it was actually closed below. That was not good. With 8 million shares, lighter volume. But the next week was a false breakdown message. But price still remains below that red oscillator and change line. that is Snowball. That adds to the idea that price should pull back towards that 84.01 level. And really, what you want to do is you want to take a look at the volume going into that January 9th swing point. You'd like to see, if you're looking for a buy here, you'd like to see that with less than 2 million shares. You'd love to see it reject it, and that means close back above 84.46. Monthly time frame. Tomorrow, it will negate a Rhodes Momentum Indicator bottom if price closes below 84.20. So 84.20 is the number to be watching for tomorrow out there. Otherwise, it's got a monthly bottom. It would have a daily bottom. And I don't have anything really on the weekly at this moment in time. So that's what I see with regard to Snowball. Hope that helps you out. Alex writes in and would like to take a look at ExxonMobil. XOM is a ticker symbol, and Alex is trying to identify where is ExxonMobil headed to. So that's a great question. Let's see if we can answer it. I would have to say that where it's headed to is higher price. Now, the reason I would say that is because on the daily time frame, there was a TD9 count top that completed 2 days ago. It was negated yesterday. So you do not have a top in place for the daily time frame. We take a look at the weekly time frame out there. Actually, I'm going to look at the monthly time frame. Let's pull this monthly chart back. Let's see if we can find. Oh, we can. Well, I want to make sure we can. Let me just make sure that I've got at least a 0.382 retracement from the low that we could likely use to this high. Do we get a 0.382? No, we didn't even get a 0.382 retracement. Shoot. So that's really kind of the bummer there. What do we have here? Guess that would be it. That's the only B point. Is that true? Let's see. Yeah, I'm trying to find us to get at least a 0.382 retracement off of the move from the low to the high. And all I'm getting is these 23% retracements. The only place where I get a 0.382 retracement, is way back here. When I say here, let me just draw it in, just so I'm not confusing anybody, or even I am confusing somebody. Let me draw it in. That would be your A to B point, and this would be your B to C, your C to D point out there. And so, we can see we've done more than a 1 to 2 already. So I'm not really sure that, and that's what I would have used as a price projection type tool for you, because that's what you're asking for. So I don't see that. Is there anything else that we can see here that we might be able to use? I guess the only thing that I see out here then that we could use as a possibility for a price projection of where ExxonMobil is likely headed to would be a consolidation pattern. So that would look something like this. So all we then now do, Alex, is we take that consolidation pattern. Once you break through it, which it's done, it provides us with a measured move equal to or greater than the consolidation pattern. So if you give me a moment, we'll get that up here, and that's going to look something like that. So that gives you a price projection in the 149-ish area. Remember, when you break through consolidation, though, it's equal to or greater than the consolidating pattern out there. Monthly time frame has got no topping pattern. The weekly time frame has got no topping pattern. The daily time frame negated a TD9 count top. What ExxonMobil wants to do is it wants to move higher out there. So, Alex, I hope that made sense to you. I hope that helped. Let's take a look at, I'm going to go to the intraday charts here. Lights Recruit happens to be up on my screen. I'll cover that. That was not a request, just since it happens to be up there. So on Lights Recruit on a daily time frame, because there's a discussion in the den, is Lights Recruit getting ready to top or not? The answer to that question is absolutely not. So let me be definitive here. Absolutely not. Well, how could you say that, Steve-O? Well, if we take a look at the daily time frame, we've actually got an A to B equals CD pattern to the upside. We have bar number 5. I don't see any kind of a topping pattern. So let's go ahead and draw in the A to B equals CD pattern for Lights Recruit. It's going to start with the low down on December 16th, and the high comes in here. The B point is going to be January the 14th. We're going to go ahead and copy. We're going to go ahead and paste, and now we're going to go ahead and assemble and move that so we can move that to the C point. And you can see the 1-to-1 A to B equals CD gets us up to the 65.78 level. But we're on the left-hand side of that C to D leg. That increases the odds that we're going to do more than a 1-to-1 A to B equals CD pattern to the upside. That's what's going on the daily time frame. The weekly time frame will negate a TD9 count top for its 5-hour chart in 10 minutes time. We already negated the 4-hour time frame chart. That wants to continue to move higher. We are negating the TD9 count top on the 2-hour time frame chart. You kind of get the feel here. The charts are suggesting that Lights Recruit wants to head higher. We come back from this break. We're going to take a look at the NQ for Nicholas. We'll take a look at Nordic American tankers for Dan inside the Tiger's Den.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Welcome back, folks. Great to be with you, although it's early in the morning, 8:54 a.m. If you are listening live, thanks so much for doing that. If you're on the recorded show, thanks for doing that as well. We'll be back to normal programming tomorrow. We're taking a look at the NQ. This is for Nicholas. And the NQ's got a daily, this occurred yesterday. The NQ negated a TD9 count top, negated a TD9 count top, and triggered an A to B equals CD pattern to the upside. That A to B equals CD pattern to the upside takes us to new all-time highs. Will get us up towards the 26,850-ish level out there. Now, there's a TD9 count top that gets back to the October 30th level out there. That is priced at 26,670. If price closes above that, it negates that pattern out there. That's the bigger picture, because we're looking at intraday charts out here. The chart that you want to be focused on, Nicholas, is going to be the 30-minute time frame chart. It'll form a TD9 count bottom as long as price closes at 9 a.m. below 26,200 or 26,205. If you close below 26,200, you would get a TD9 count bottom pattern. If you don't, that numbering sequence is going to go way out there. You are at breakout support at 26,162. That's another level to watch out there. That is the only intraday bottom signal that I see inside of the NQ. There are a couple of topping patterns. The most important one, I think, is the 5-hour chart. TD9 count top, and that says watch the high, 26,349. If you close above that, we are going to rally further. Let's go take the Nordic American Tankers. This is for Dan inside the Tiger's Den. Nordic American Tankers has an A to B equals CD pattern in the daily time frame. It's got one on the weekly time frame. Well, the daily time frame, what you're watching for here, Dan, is you're watching the TD9 count top, and that's at 419. We closed at 419 yesterday. You got to close above it, beat 420 or above to negate that. If you get that, the daily time frame chart will then say we are headed higher. The weekly time frame and that the A to B equals CD pattern on the weekly chart should resume. That gets us past the $5 mark. Your next resistance level is going to be 440. That comes from the monthly time frame chart. We are in bar number 8 on a monthly basis, but this is likely going to head higher. So 440 is the next target. You get above that. First, you got to close above 420 or above. If you do that, you're headed to 440 and above that to the $5 mark. Folks, stay tuned for all the great programming. I'll see you back here tomorrow live at 11 a.m. Take care. Be safe out there.
Sharpening your skills as an investor